Hello everybody and welcome to week 22 of my Zero DTE portfolio performance update. This is for May 26th through May 30th. And in these videos is where I document my establishment, my focus on zero DTE trading and building a zero DTE portfolio. And so I am going to be providing an update for week 22 on my progress. Just a quick disclaimer that I am not a financial advisor. I am providing this information on this YouTube channel for educational purposes only, and just a reminder that I am not a licensed financial advisor, and the information that is being provided in these videos on this YouTube channel are for informational and educational purposes only. All right, so just a quick recap as to why I am focusing on zero DTE. One of the big advantages is that there's no overnight risk. We've had some pretty volatile markets over the last few months, and that has caused a lot of difficulty with a lot of traders, putting them in difficult positions, and some of that comes through news that happens overnight. And so if you can be out of most of your trades, if not all of your trades, and have no positions on overnight, then think about how much risk that is taking off the table. So that's one of the big benefits of zero DTE that is making me shift my focus towards that style of trading. Additionally, you can reduce risk by choosing to skip certain days. And as I will talk about in this video, there was a couple of days that I chose not to trade zero DTE. And I will explain why, and I'll show you the results of that. Was it a good decision or not? But that is a big advantage. I mean, if you know something is coming up, prime example is the FOMC announcements. Those typically tend to move the markets. It tends to, from at the beginning of the day before the market opens, it tends to cause volatility to expand because people don't know what's going to happen. And then once that announcement is made, the market will move based on investors' perceived reaction to the announcement that was made. And that's going to move the market in one direction or the other. You'll have a vol crush at that point because the volatility, the uncertainty has now been removed, which means the volatility is going to decrease and you'll have a vol crush. But those are days where you just don't know what's going to happen, and it's better for certain strategies to just skip those altogether. Not to say that there aren't other strategies that can benefit from things that happen on from those types of events on those types of days, but in this particular case, it is an advantage to be able to skip those days and not be in a position. Also, results can be validated by backtesting, and I am going to be getting into that in today's videos. I'm going to show you my results, and I'm going to compare that to what the backtest showed. So the backtest that basically confirms that this is a tradable trade that led me to the decision to trade this particular strategy. We will go back and see, okay, we knew how it did going back prior to the time frame that we decided to implement the strategy. Well, how has the backtest been performing in relation to the real world results? Compare the two and see how they line up. And I'll be doing that today in today's video. And then you can also diversify through strategy. I mean, there's just as there's many different longer term option strategies, whether you're doing 7 days to expiration, 30 days to expiration, or 45 days or 60 days to expiration. You have many different strategies that you can employ with those types of time frames. With zero DTE, it's very similar. There are many different strategies that you can employ. So you have the ability to diversify your strategies through zero DTE. So not only are you reducing risk by not having overnight risk for zero DTE trades, you also have the capability of reducing risk by diversifying your strategy with the zero DTE style. And then the last advantage, and this is also true for non-zero DTE trades, but it's very common. I would say it's probably more common with zero DTE trades than it is other types of trades. I don't have any data to back that up, but just from my observations, from what I'm seeing people do, you can automate these trades. And I'll show you how I am doing that in this video. All of the zero DTE trades that I'm doing currently are completely automated. Now I am looking at doing kind of a hybrid where I am using, I will set up bots to fire off trades, but I will be monitoring the market and looking for certain conditions before making the decision to fire off the trade. But when I do fire the trade, I'll be using the bot platform to enter the trade, and then the bot platform will monitor the trade status and exit on certain conditions. And then I'll also manually monitor the position to decide, make a discretionary decision about when I can exit that trade. So I'm experimenting and taking a look at those options as well. All right, so what I'll be going over today is I'll be going over my closed trades. I don't have a lot of them, so it should be pretty quick, but I'll talk about the strategy, the goal for that strategy, how much profit or loss I've incurred from that strategy, and then I'll go back and take a look at the back test to see how the real world results compared to the back test. I'll look at my overall performance for the week, all of my strategies combined, how did I do, total profit, and then compare that to previous weeks to see how I'm progressing over time. And then any insights that I have from this analysis I will also share with you. All right, so now I am in my TraderSync platform, and this is the platform that I am using to track my trades. If you are currently trading and you don't have a good solution for tracking your trades, I do highly recommend TraderSync. And if you use my referral link below, they will give you a free trial so that you can try it out. I think it's a 7-day trial, but it'll give you the ability to get in there and play around with it and see how easy it is to use. One of the biggest features that I just love about it is the fact that I can just click on this little plus button down here, and I can, once this loads up, I can import. It has my Tasty Trade account linked to it, and I can just import all of my trades directly into the platform. And then from there, all I have to do is assign tags to each one of my trades so that I can easily track them. And you'll see how I track them when I go through my trades on this video. And one more thing I would just like to mention is that if you are new to this channel and you are new to options trading and you are you're looking for some basic understanding of some basic concepts with regards to options trading, then definitely check out my demystifying options video, which I have linked in the description below. That'll give you a basic understanding of some of the concepts that I'll be covering in this video, so that it'll give you a little bit more insight and better understanding of what I'm talking about. All right, so anyway, what we're looking at right now is my cumulative return since I started my focus on zero DTE trading, which was in week 17. We're currently in week, we're getting ready to start week 23. We just finished week 22, and this is through week 21. So my cumulative return through week 21 is a loss of just under $2,500. And we can take a look at the chart here in the reports section. Now, keep in mind that's a loss, and that's typically not a sign of success. But this, you got to keep in mind, this is a new strategy for me. It's not something I've traded. I've maybe toyed with it and looked at it a little in the past, but never put any serious effort into it. But now I am getting serious with it. I do believe it is a viable style of trading. And I do believe it's going to be much, I mean, it's grown in popularity tremendously over the last few years, and I think that trend is only going to continue. And so I think it's very beneficial to be able to learn how to do this and to find strategies that work consistently. So that is my goal. But over the last, what's it been, 17 to 21, what is that, four weeks? I've had some losses, but I've been learning. And you kind of expect to take some losses when you're learning. Plus, I'm trading pretty small. What I'm doing is I'm looking for some consistency. I'm looking for some confirmation that yes, this does work and can work consistently over time. And once I feel confident that I have that confirmation, then I'll start building up my position sizes. Right now, all I'm doing is one contract per trade, which is pretty small. And there's another drawback about that is the fact that on a percentage basis, the commissions and fees are eating up a lot more of my profits than what it would be if I was trading more contracts. So, but at the end of the day, I'm just looking to get that confidence to see that this is consistently working so that I can then start building up my position sizes. As you can see here that the chart shows a bigger decline towards the beginning of when I started doing this, and it looks like it's flattening out a little bit here. I do think that that's a sign that as time is moving on, I'm figuring things out and I'm able to improve my results. Still showing losses, but the losses are less severe. And I think that trend is going to continue. And if we take a look at the week closed chart here, the bar chart, that's showing the same basic thing. Here in week 17, I just did one trade, and then in week 18 is when I started doing the MEIC and started going full throttle with it. Well, not full throttle, but just I did a lot more in week 18 than I did in week 17. And then, we're just continuing. Yeah, we did show some losses in 20 and 21, but let's go ahead and get into week 22 to see how I did in this most previous week. All right, so now I have the results pulled up for week 22 for just the MEIC, which is the multiple entry iron condor. And if we take a look over on the calendar section here, you can see that I only traded for 3 days. And my total return was a loss of just under $703. So now remember, Monday was a holiday, Memorial Day, so I couldn't trade on that day. And then the 23rd, no, I'm sorry, that's the 29th, I sat on the sidelines because the market basically looked like an EKG after the court's ruling outlawing Trump's tariffs. So I did decide to sit that day out. And then, let's see, on the 27th, I decided to disable. So the 27th was Tuesday, and I decided to disable the MEIC trades. When I say disable, what I mean is I went into the bot in TradeStewart, which is the bot that I use to automate these trades. I disabled the trades after the first tranche. So the first tranche fires off at 12:30. We entered into that trade, and it did fine. So that was this trade here on Tuesday. I just noticed that I only have one trade on Tuesday, and I have it marked as trade 2, which is incorrect. It was trade 1. So I can just come in here and change my tag to number 1 and get rid of number 2. So that fixes that. I'm not sure why I had it that way, but anyway, you could see here that I did get stopped out, which is why it's showing a $25 profit. So I only did one tranche. Let's see, I got stopped out on, yeah, I got stopped out on the call side and the puts expired worthless. So because the credit received on the put side of the trade was a little bit more than the credit received on the call side of the trade, that enabled me to have a very small profit. Basically a scratch on the trade, but hey, scratch is better than a loss. So let's go back to the dashboard here. So the 27th was an interesting day. I mean, these types of trades, the 0 DTE, can get very emotional because the 27th looked like it was as smooth as butter. And that's what we want with these MEIC trades, because we want the trading action to happen within a range. If it starts moving outside of the range, that's when one side or the other is going to get stopped out. And it looked like, I mean, these trades were entering, they were showing profits. The market was pretty smooth. It didn't look like, and here's the thing, the longer these trades are on, then the greater the chances are that they're going to close out for a profit. So as you start to get towards the end of the day, you start to think, yeah, there's no way these trades are going to get stopped out. Looks like I'm going to be booking some nice profits today. And then boom, I think it was around 2:54 and the markets closed at 4 o'clock. So this was just a little over an hour prior to the market closing. The market just took some wild swings and knocked out a bunch of stops, both on the call side and the put side. And I can even show you here real quick. Let me pull it up. So this is the spreadsheet that I use to track my, my multiple entry iron condors throughout the day. So just to kind of give you a little bit of an overview of what you're looking at here, each line is, we've got a blue line, a light blue line, and a dark blue line. And so each line is a tranche. We got the call side here and the put side here. These are the strikes, the short strike and the long strike, and this is what I collected to sell the short side, and this is what I paid to buy the long side, and this is the credit received. Ideally, we do not want to see any numbers in these fields here because this indicates what I closed out, what I was stopped out for. So essentially here we can see the put for this particular set of tranches was closed out where I paid $3.50 to close this trade, that I paid $1.65. Well, it was $3.50 minus 95. So what is that? $2.55, I think. This shows my P&L on each side right here. So on the calls that closed out or expired worthless, I was able to keep $151.44 after commissions and fees. And then on the put side that got stopped out, I lost $95.12. So if we look at the sum of both of those, I actually made $56.32. So ideally, we want to see these fields here blank. The more that these are blank, these particular fields in these columns here, the more these are blank, the better, the more profit I'm generating. And just so you know, the orange fields are the backtest results. So what I'll do is I'll go in the next day or at some point after these trades closed out to record what the backtest would have, to record what the backtest showed. So if I was just relying on the backtest results, I can enter those here to see what that would have generated. And then down here I have a total P&L for both the real world results and the backtest results. So I did fare better than the backtest here. But as the day was going on, I don't remember at what time these stops came in. I think this one came in fairly early in the day. But I was getting towards the end of the day and I didn't have any of these stops right here. But then it was right around 254, very close to the end of the day, just when you're thinking, yes, it's going to be such a great day. I'm going to book so much profits today. This is going to turn my 0-day trading around and I'm going to be in the green now. Yep, all of these got stopped out, and it got stopped out and on both sides. And so that's the worst case scenario for each tranche. And it's not something that happens a lot, but it does happen, and this is where you see the majority of the losses, which is why we had a loss for that particular day. But now I'm going to go back to the backtester and see what the backtesting results were for the week. And the backtester that I'm currently using is Options Omega, and I have the settings put in for the multiple entry iron condor, and I have it set from May 26th to May 30th, which is week 22. And as you can see, it did show a loss of $1,701. So the fact that I have a loss of around $700 confirms that yes, I should have had a loss, and actually I performed better than the backtest. Now that may be a good thing or it may not be a good thing. If the settings in the backtester aren't accurately reflecting real world scenarios, then that's not really a confirmation that the strategy that the backtest says works actually works. In order to have that confirmation, then you should have some pretty similar results between the two. The reality is, though, you're never going to get perfection because the real world just acts dynamically. There's different dynamics. It just acts a little bit differently, and plus the backtester can only sample information so frequently when it's historic like that. Otherwise the database would just be too huge and it would just take too long. But it does sample it once a minute, which should give you results that are pretty close to the real world. Now, I did mention that I decided to sit out on the 29th because the volatility, the price action, it looked like in EKG it was just too volatile, which is not good for iron condors. So let's take a look to see if that was the right move. And so I put in a date of the 29th, just for the 29th. And as you can see here, it was the right call because we, at least as far as what the backtest shows, we would have ended up with a negative, we would have ended up with a loss. And if we take a look at the trade log here, on that particular day, we would have only had a profit on 4 of the tranches, and then the other 8 would have been losers. So it was a good decision. It was a little too volatile that day. However, on the flip side of things, I also said that I decided to disable my bots on the, what day was it? The 27th, I believe. Yes, it was the 27th, and that was the day where I only had 1 bot fire off. And then after that 1 bot, I decided, no, I'm going to quit for today because it's just looking a little too volatile. So let's take a look at if that was a correct decision. So that was the 27th. So we'll go ahead and run the results for the 27th and see if that was a correct decision. And as it turns out, it was not. That would have actually been a profitable day. But you know, that is part of my learning process. Learning when to trust the results, just trust the backtest and trust the strategy that it does work and let it run and not interfere with it too much. And then knowing when, okay, yeah, no, it is time to interfere. And that just comes, I think, with practice, realizing how the movement in the market affects the trade and just getting more of a feel for it, which, you know, I think that will get better and better over time. And, you know, looking back in hindsight, I can compare what I was seeing on the 29th to what I was seeing on the 27th. And the 27th, it was a little, there was some movement going on there. But typically what we see is in the beginning of the day, we see a lot of movement because that's when all of the news from the previous day is being factored in. That's when institutions are trying to get all their orders filled, whether they're buy orders or sell orders. And so you're going to see that fluctuation until that first 30 minutes to an hour passes by, and then typically you'll see the market settle out a little bit, and then right around 2:30, 3 o'clock is what they refer to as power hour, and that's when you start to see a little bit more volatility coming in, and some, if you're going to see some market swings, you can expect to see them during power hour as well. As it turns out, if I would have let Tuesday go, then I would have been maybe flat to slightly up. So again, this is another area where I can continue to improve. All right, so let's look at my next strategy, which is the iron condor with re-entry. And with this strategy, it opens up, if the VIX does not move, does not gap down by more than 0.25%, it will open an iron condor at 9:32. So right after the market opens, it will open an iron condor, and then it will use a trailing stop loss. So first of all, it's a wider position. On each side, we have more room for the market to move. So that, I think, gives us a little bit more room to have success. Of course, you know, on the flip side of that, it's also more risk, because the more you let the market move, the more potential loss you could be taking if it keeps going in that direction. But if you do get into a profit situation, once it reaches a certain profit level, then it moves the stop up. So it basically locks in a profit. And you can see that on my profit and losses here. The smaller profits, like the 290 and the 390, that's where it used a trailing stop loss. So basically, we triggered that point to where the trailing stop was moved up, but then the market moved in the direction where it stopped it out. So it didn't have the opportunity to expire worthless. It did get stopped out for a smaller profit. And then these bigger profits, like right here where I got $855, that's where the position was able to make it through to the end of the day and expire worthless, in which case I was able to keep all of my profit. And then when I do have losses like the $710 loss here, that's where the position, that's where I never got into any profit position, where my trailing stop was never moved up. I hit my stop loss, which is set at about $16.50. So when I enter this trade, I collect about $9, and then the stop loss is set for $16.50. So this is about what I would lose if I hit that stop loss. So I hit it here, hit it again here, and it looks like I hit it there as well. But overall, on this particular strategy, I had a profit of $586.33. As we can see here, I traded on Tuesday, Wednesday, and also skipped the strategy on Thursday, and then again on Friday. And I had profits on Tuesday and Wednesday and a relatively small loss on Friday. But overall, it was a profitable week for this strategy. But let's go ahead and switch over to the backtester to see how the backtest results compare to my real world results. All right, so here are the results from the backtester. And interestingly, it shows a loss of $140, whereas I made a profit of, what was it? Just over $500, yeah, almost $600. So what I did was I went back and I looked at the trade log to see why was there a difference. And as it turns out, the backtester never fired off on Tuesday. And if you recall, I made a profit on Tuesday. So the backtester does not reflect the results that I got on Tuesday. And remember that there is a condition that it checks, both my bot and this backtester. And that condition, which I'll pull up right now to show you, is the max VIX overnight move down. So it has to be less than 0.25%. If it's more than 0.25%, then it will not enter into this trade. So for whatever reason, Options Omega, the backtester, did not see that condition, or it saw a condition where it should not fire off the trade, where my trading bot did. So that's something that I'll have to watch and pay close attention to. And if I go back and look at the comparison on my spreadsheet, it seems that the way the backtester predicted the trailing stops would have worked was a little bit different than the way they worked in real life. Especially on that third tranche, it shows that I would have made a profit on the last tranche of almost $300, where the backtester shows I had a loss of $675, taking basically a full loss rather than being able to get that partial profit. So there are some discrepancies, and I'm going to have to continue to monitor that. But overall, this is the strategy that I have the highest level of confidence in. So I'm definitely going to keep running this one, and I can show you here real quick. Let's say over the last, since the beginning of the SPX dailies, let me show you the results of what that looks like, because it has some very impressive results. So here we have the results going back to the beginning of 0 DTEs 5 days a week for SPX. And that's a really nice chart there. We do have some drawdowns along the way. There was a pretty good drawdown right here, but the max drawdown is 3.2%. If you would have started out with $100,000 back in 2022, you'd be up to 184,260. So it just looks like a really good strategy. And I think the difference is there's a couple reasons. One is we're getting a little bit further away from the price because we're collecting more on each leg of the iron condor, and because of that trailing stop loss. I think those are two factors. When you think about the multiple entry iron condor, we're just arbitrarily entering iron condors at, I don't want to call them randomly selected times throughout the day, but just at certain times throughout the day. Currently we're doing 12:30, 1, 1:30, 2, 2:30, and then 2:45. So 6 entries throughout the day. And then we're relying on the law of large numbers to let the numbers work in our favor. We know we do have an edge, even though it's a slight edge, but we're closer to the money, which means we get stopped out more. And there's no trailing stop loss. There's no taking smaller profits. It's pretty much a ride or die. You either win or you lose. And I think and you can take a look at the back test. Let me pull it up here real quick. As you can see here, the win percentage is 71.5%. On this particular strategy with a max drawdown of 3.2%. Let's compare that to the MEIC for the same time period. All right, and so here we have the back test for the same time period going back to May 16th, 2022. That's when the 0 DTEs started trading 5 days a week on SPX, and we can see the numbers are much different. The win percentage dropped down to 54.2%, much lower. The max drawdown is negative 9.5%, and the P&L is quite a bit lower as well. And we can just, let me just click here, and we can compare the two. So yeah, the P&L on the MEIC is just over $47,000, whereas the P&L on the Iron Condor with re-entry is $84,000, just over $84,000. The win percent was 71.5 with a max drawdown of 3.2. And it drops to 54.2 with a max drawdown of 9.5%. So big differences there. I'm going to continue running MEIC for now, but I think I can do better. I mean, I'm not enamored with that strategy. I think I can do better, and I am experimenting with some things to improve my results, hopefully. Maybe just having a little bit more discretion on the trade rather than just letting the bot take over and enter at set times every single day. I mean, that does work. It works over time, but I mean, we can see here that it doesn't work as well as some other strategies. So we're going to, obviously I want to have the best performance possible without taking too much risk. All right, so going back to TraderSync and taking a look at my overall P&L for the week, I did have a loss, albeit a fairly small loss of $117.55. It's a smaller loss than what I've been taking in previous weeks. And I am seeing some positive results in a certain strategy, and I'm seeing why I'm not having profits. There are things that I can be doing differently to change that picture. So I'm pretty pleased overall, even though I do have a loss. And I'm pretty optimistic moving forward that we will be able to turn this around, and that over the long run, we're going to be booking profits. And I think we're going to be booking pretty healthy profits over the long run. So yeah, I am optimistic about this overall. And of course, if we look at our little setup widgets here, we see that the Iron Condor with re-entry was profitable at just under $600, and the MEIC was not profitable. It could have been. If I would have chosen to trade on Tuesday, we would have had a small profit, so I would have seen an overall profit for the week had I allowed Tuesday to trade. But it is what it is, and it's a learning process, and the reality is I took a loss. So overall, not too bad. I mean, it could be worse, it could be better. And so let's take a look at how we're sitting since we started. And remember, we started 0 DTE in week 17. So if we select all of the weeks since 17, including the most previous week of week 22, we have a total loss of $2,604.28. So it's not green, it's still red, but I think we're making progress and we're moving in the right direction. We can take another look at the reports graph here. Yeah, still kind of flattening out here. So let's see if we can turn this around and make it start moving up. And we'll take a look at the bar chart. So yeah, you can see that we do have a smaller loss for week 22. And we'll see how week 23 goes. All right, so that's it for this week. Coming up, I just want to talk about what I'm going to be doing in the future with regards to 0 DTE. I'm going to continue to tweak back tests, just adjusting entries, adjusting exits, see if I can bring in the slippage, make that a little tighter. I'm going to add some newer bot-friendly brokerages. I'm currently working on getting Tradier brokerage set up. That's going to help because my commissions are going to be lower. And it is, that obviously, especially at this stage of the game, commissions can have a big effect on the overall P&L. And then I'm also getting a account open with Charles Schwab, which offers the Thinkorswim platform. And I think that's going to just give me more flexibility overall. And then I'm going to continue to test new strategies to continue to build out a 0 DTE portfolio. Again, I mean, I'm not crazy about MEIC. I think it does work. I think it works over the long haul. Will I stick to it or replace it with something else? I'm leaning towards replacing it or maybe just modifying it to find some a way to make it more effective. So, I'm just continuing to build out my 0 DTE options. This is a huge learning process. I've learned so much information over the last 4 or 5 weeks, and I'm continuing to learn more and more information. And I think this is going to get better and better over time, and I'm very excited about the future. So if you are also interested in 0 DTE trading and you want to see how my journey progresses, then make sure you comment, like this video, and then subscribe to the channel so that you can follow me along to see how I do next week. Am I going to get back in the green? Am I going to find some other strategies or some other tweaks that are going to improve my results? Subscribe to the channel so you can find out, and tune in again next week. But for now, I'd like to thank you again for stopping by, and look forward to seeing you again next week. And until then, happy trading. Bye-bye.